JB here. Hope everyone's doing outstanding. April 9th, 2025, about 8:57 a.m. on this fine Wednesday morning. Talk quick about the market, some names I'm looking at, go from there. S&P futures, I would say off the lows, but I guess you could say off the overnight lows. S&P set to open about 1.5% to the downside. Actually, it's down to 1.1%. Uh, you would think like if there's, I always think there's like if there's opportunities. Last night was another one of those opportunities for the market to like open limit down, right? I mean, we reversed course 424 and change at 10:18 yesterday morning, and then just a meltdown. Some of that was, I mean, it wasn't really much headlines, but just the fact that people come to the realization that, hey, there's not going to be talks between the U.S. and China, and those uh, extra 50% tariffs are going to come into effect, 104%, right? Just remarkable stuff. And then around 10 o'clock, I guess, then yield started to reverse. So TLT was 90, and TLT is usually what I look at to kind of get a gauge kind of where yields are going. So as typically U.S. Treasuries were kind of like the safe haven. The Japan debt as well used to be safe haven, right? When you invest in those two countries' debt, you pretty much have a like 100%. I would say nothing's 100%, but you're betting on the government's not going to default, right? That's what it is. That's what a safe haven becomes. And so, as there's market turmoil, geopolitical situations going on, uh, recession worries, global recession worries, you would think that those assets will be bid up, right? These treasuries, the bonds of the countries. So the U.S. and Japan, and what happened? U.S. debt started getting sold off, and then you see yields start to rise. And you're like, wait a second. And the people are saying that the current administration is trying to stoke a recession, put the economy in a recession, which will force yields to go down and force the hand of the Fed. So even if that is the case, right? Uh, yields go in the other direction. It's not working, right? So then then as and you've seen this over the years. Every time we get these big swings in the market, something breaks, and I don't know if it was the COVID. I think it was COVID. UVXY, the VIX got broken. I forget, it was pegged against something that broke, and then people got blown up. So these things always seem to happen. So now they're saying that the bond market is broken, and then then they'll say, oh, China's selling the U.S. debt, and I think of all the U.S. debt, Japan owns the most debt, like 1.1 trillion U.S. debt, and then China's up there like $700 billion, right? But there's always talk, and every time 2015, 2030, 2011, anytime the market sells off and there's weird anomalies, people always start to come out with these stories, and maybe there's some truth to it. I don't know, but there's rumors that China's selling U.S. debt to force the U.S. the U.S.'s hand in it with the trade war. Needless to say, like, you watch last night and you see the TLT, all of a sudden it's 84, and like, wow. I think that was close to an all-time low on the TLT. So, well, it's definitely something to watch here today. Uh, I keep saying that I think we're more. I think the risk reward is more towards a squeeze than more downside, but can't rule out both scenarios. Yesterday is not much in the way of catalyst, so it's like the market. It's like the free. It's like the market is in an ocean, and it's just waiting for the breeze, and it pushes the boat back and forth depending on which way the wind is blowing. It's kind of yesterday's action, right? There wasn't really much in the way of catalyst outside of the reality setting and for the 104% tariffs being uh, on China, and then markets just sold off. And then also this morning, well, overnight you had a white paper from China, kind of hardening the stance, China and the U.S. saying they're not going to budge. And then they also early this morning said they're going to slap another 50% on U.S. imports, which obviously, I mean, China doesn't import anywhere as near as much as the U.S. imports. So it's not as well, it's more of a signal than anything. But so anyway, watching today, and I put on the watch list of just key areas at 482 is kind of like the line in the sand. I was saying on the SPY much higher, but I think there's another area you got to watch. And then if that breaks, and I think 440 comes, depending on any headline. But I think it's like everybody's walking on eggshells, waiting for some kind of positive development. And the longer this goes, the worse it gets. It's like like I said, it's if your hand has an infection and it's not bad at first, but if you let that infection keep going, you're gonna start losing fingers, and obviously you're not gonna be able to grow that finger back. So it just does more damage the longer we go. So hopefully there's some resolution. What Japan trade partners were coming to the U.S. I don't know if there's meetings today, so maybe there'll be some positive headlines there, and maybe that'll start the snowball effect, and maybe we'll get some positive headlines. If not, this is just It's not a good situation. All right, so that's kind of overall market. And then my spaghetti lines that I put on here, and I'll post this in the chat room. I don't have the live stream. I apologize. Uh, it's almost like target practice right around that 440 area. You have 440, 444 or so, and then 438. So uh, those would be the areas where you would hope we would bounce. But to me, it's like nothing certain in regards to recession, and the economy is doing great. So unless there's a quick, it's like when COVID, all of a sudden they said, okay, all the businesses have to shut down. So there was a quick stop on the economy, right? We don't have that just yet. It You do have people maybe out buying more stuff, so maybe it helps the economy for buying cars, buying things. Like I was making that analogy last week. It's like when the weather report comes out, and if you're in the Northeast, they say, "Oh, big snowstorms coming, blizzard." Everybody goes out and gets the milk, eggs, and the bread. Shopping markets mobbed the supermarket, and then you walk out today. It's supposed to be a snowstorm, and it's sunny and 50 degrees out, right? So I'm hoping that's the case, right? I mean, that's my half glass full scenario, but have to be open to both sides. All right, so that's overall market. That's kind of what I'm watching. Over 500, I might look for some spec calls. You would think amidst all this turmoil, how can the market rally? But that's just, you do this long enough, you see, it's like you'd be like, why we hit, and also a time frame of note is 1018. So 1018, we hit the highs yesterday. I think it was 424 and change. 1018 was the highs on Monday after that tweet. So I don't know. History tends to repeat itself. I'm not saying that any strange about that number, but certainly something to watch. So maybe we have a reversal of 1018 today. Here's the 10 year, and unfortunate, because if there was, again, I try to look at things an optimistic view. If there was one thing that you could look at, I say, wow, mortgage rates are coming down. Housing was picking up the last weeks as people start to, the pent up demand catch up because rates are going down. And then boom, we have this. So hopefully that reverses at some point. All right, that's overall market. And then other things to note, we're still not at the lows in regards to the amount of stocks trading under their 200-day moving average. So if you take a look back in 2022, I think it was 18% right now. We got under 12% of the stocks trading on the S&P were under their 200-day moving average. Right now, I think it's like 6% of the stocks trading on the S&P or above their 50-day. It was less than that in 2022. So we'll see how that all plays out. All right. So now individual names. Netflix still up 1% this week. I was looking for, the name is showing relative strength even last week. So I was looking for some more strikes. Once it started to break over 900, started to rally, then it got over 920. I went and got some spec calls. And then sure enough, pretty much timed the top. Once it broke over 900, couldn't get back over. I salvaged the calls. Still a name I'll continue to look at. You had KeyBank adjusting their price target today, keeping their bullish rating. I think it's a name that can outperform if the market, I mean, it already is, but if the market finds any kind of footing, I think it trades back into the mid 900s, if not higher. So that's Netflix. And then in an early afternoon, once the market started to show signs of cracking after melting, I went and got those SQQQ calls finally. Uh, I keep saying on this one too, if they're kind of like, if the market, they're an oh shit position, right? Pardon my language, but if markets really start to tumble, this is a name that obviously I think it goes parabolic. But once the market reversed, able to close some of the strikes out for 100%, then at the end of the day, nearly 300%. I'll probably, I mean, who knows what they're going to open right now? SQQQ looks like it's going to open red here, but I probably close a few more out at the open, and then I'll just hold the rest as a kind of like a put hedge, just in case, because it's going to be volatile again today. And the other hard part is with the volatility, the premiums are elevated. So, I mean, as we get closer to Friday, it makes it easier with the premiums. But midweek, it's tough to find a decent risk reward position to protect from downside. I was looking at TZA calls yesterday. The 30 strikes, the weekly strikes were insanely priced. So, unless you really think it's time to get into the bomb shelter and the market's just going to fall off a cliff, it's hard for me to wrap my head around the risk reward on those. So, I continue to keep things small. So that's SQQ. And then the other name. So RH thankfully closed most of my calls out on Monday. Yesterday took it on the chin, down nearly, over 9%. Still like this one. I mean, again, if we have any headlines, some of these names could be up 20, 25, 30% on a squeeze. So not going to rule that out again. But, if it gets over 150 today, I might look for some more strikes to play for upside. Same with W, still holding my freebie strikes. It's up here actually in the green here this morning. Any headlines with Vietnam? I think this takes off over $30. 30.99 was the 200-day moving average, so watching that. No, the gap fill, excuse me. Still like GameStop here. I mean, it was up near its, if you take a look, it's 50 and 200-day moving average are right next to each other, 24.70 and 24.80. Gonna need some gas here today. It's 23.39. I'm surprised it wasn't up more yesterday with the insider buy by Ryan Cohen. Still like this one. I'll look for May strikes. I'll be patient. And then also deck, right? So I got those deck calls the April 17th. Why is this not working? And then it looked like it was going to run yesterday. It was actually, my calls were solidly green at the open. It was over 110, and then it just gave it back, closed down 4%. Still like this one. Again, another name that I could have, think it'd have a nice squeeze if the market's too reverse. Nike is another one too. I don't have it on the chart. Oh, I do have it here. It was down another 4%. You can make the case these are bottoming, but I mean, these are wide ranges on these stocks. Just of note too, yesterday's trading range on the SP over 7%, Monday's trading range over 8%, Friday's trading range over 4%. So, it was like, I think it was like 10 days ago I posted that the S&P traded in a 0.41% trading range, and then sure enough, what happens, we just, all the wheels came off. Other things to note, so we have CPI tomorrow, earnings on Friday, JP Morgan, Wells Fargo, BlackRock, someone else reports too. And Walmart has Investor Day today. So they already released kind of like a press release reaffirming guidance and stuff. I don't know if they're going to be able to spin some things positive. So Walmart could be one to watch here today as well. Some of these names, typically, when you have investor days, they don't go in there and all gloomy. It's usually, rah, rah, sis, boom, bah kind of situation. So Walmart could be one of those names that runs today. I think that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.